Fun Friday, but we have a full session ahead of us. It's been a week since the release of V4 rolling out on Monday, and we have to continue. This is a work session. It's not Fun Friday, relaxing, roaring in the bliss, and it's going to be good and it's going to be fruitful. All right, let's start off here with Bitcoin. And so far this week, Bitcoin is off its highs. We can see that we've come into that area of resistance once again. Let me just go load this up. There we go. We've come into this area of resistance, and so far, Bitcoin finding resistance. Price there coming up, testing towards the top, off by a couple of few $100s over here, and since then has been just resetting. Equity markets here last 3 days, just kind of right floating back and forth. And right now, this structure we've seen a trend line break, the first sign of a potential reversal in trend. We see what could be conceived or what could be construed as an Adam and Eve bottom that's been put in. And we still need to claim the meaningful repair in order for us to be looking at this situation as saying it continues to develop in a positive light. We still have down over here, you can see that it could be a bear flag. Now, the flag itself is starting to get as long as the pole, so less chance of it being a bear flag. But I would say, looking at this, that the potential still very much exists, that this is a bearish continuation patterning. And until we get the meaningful repair, that's just kind of the tension that we live in. This is actually a pretty balanced take. So I just want to share this balanced take, long-term holder distribution since 2018. And long-term holders have sold into every major past top except for one time, this past drop. Bear view is they're distributing post-top de-risk. Think of the Wall Street cheat sheet. So the bear view is that they're waiting and then they're going to go ahead and redistribute back down. And that was like, oh, everything's going to be okay. No, it's not. 4-year cycle believers, recession 2026 camp. That's what they're focusing in on over here. Bull view, we held and absorbed supply, removing a key headwind, stopping the upside. And that's very much true. We looked at Check on Chain yesterday, and he was giving his view of what was happening on chain, and that definitely affirms that. Bear confirmation would be distribution will reaccelerate on the next drop as they continue to exit. Next drop for us, we just look at the lines, right? Take out this line right over here, and that's the next drop. And then you would like, if you would, not that you would like to see, if you're bearish on Bitcoin, you would look and whether or not you saw further distribution taking in on that acceleration of that drop. The bull confirmation, this was capitulation and sell pressure fades and the skies are clear. We'll find out. I mean, that will be after the fact. If we make the meaningful repair, at that point we got what is the important repair that invalidates this whole slow motion rolling over top that was in play. Now, that doesn't mean that we make a new all-time high, but it definitely resets what was taking place. And when we do make a new all-time high, well, at that point, that's the invalidation of the 4-year cycle. A lot of people, I heard this guy Joe is like, oh yeah, I read Pomp's letter, and Pomp's letter said that in 2024 the 4-year cycle was over, and I agree. Everyone's going to agree as they realize what has taken place. But the 4-year cycle was invalidated when Bitcoin made that new all-time high pre-halving. Either which way, let's keep going over here. So that's a good look. This one is not such a good look. And yeah, Cardano short on V4. Well, so I mean, it depends on whether or not there was a top, right? And unfortunately, you can manage risk around certain levels, but you don't really know until hindsight. And this chart I have up over here is hindsight galore. So I want to break that down for you. But I remember check on chain saying something to the effect of like, if a certain level didn't hold, then there would be a lot more pain to come. I think that level was around 95,000, 92,000, and temporarily, I mean, that was true, but I haven't followed in. I haven't checked in on check in a little bit of a long time. So, but I I think I mean, he's bullish here, no? I think so. Um, so this is, you look at this chart and it says number of days spent at a loss. If you look at the previous tops, then look where we are. We haven't seen nothing. So you look at this chart and you're like, oh, okay, at the top here, you were looking at number of days spent in a loss right around the 1,000, right? Above 1,000, right around 1,000. Same thing over here, a little bit higher. It was just like at 11, 1,200 days. Over here, just above 1,200 days. Even over here was on fire, and we haven't seen anything like that. There's no way that this could be the top. The problem with this chart is, though, if this were the top, October 6th, if that is the top, and we don't make a new all-time high for 3 years, 4-year cycle theory in effect, at this point, when you look at this chart, you're going to see the number of days, and you're going to see then that back over here in this area, that is rising. So it's a lagging chart, which you could look back in the future and then say what happened in the past and be like, oh, if you start seeing 3 years from now that this area is red galore, you'd be like, oh, that likely was a top. So I suppose maybe James doesn't know. I don't know. It's a little confusing the way that this is presented, but there's really no signal here until you get years in advance and you see whether or not time capitulation has taken effect. All right. Good going. Coinbase has some pull over there, huh? Well, that's good. That's good. That's good. That's good. 4.0 is better. Hey, let's keep going over here. Let me get going. Let me get into the groove. Oh, we're in the groove. Hold on one second. I want to take a look at this chart. I want to take a look at this chart, but I want to take a look at this chart, and I want to take a look at all the charts. So let's get going over here. We'll start off with what's going on. Buy side boost. Bitcoin taking profit over here, exiting the trade, locking in almost 4%. And that was after a piece had been locked in earlier, and then the other piece had been locked in. So over here, so far in 2026, off to a decent start. Solana holding a trade minus 3% against it right now. And also Ethereum holding a trade minus 1.3% against it. You notice over here on buy and sell side, Cardano has gone short, currently holding an open trade minus 1% against it. And then you have over here, better entry. That's what we're looking for on V4, holding an open trade here on Cardano. I have in the Discord ready the alerts to fire for V4 and on buy side boost for V4. The alerts are not yet active, but by Monday they will be. A lot of moving pieces going on over here. So Cardano is short. Solana's trade, V4 was not rolled out at this point. Ethereum is long. And so we got a mixed market here right now as Cardano, the weak link here, attacking the short side, and Bitcoin is out of the market. Stocks 100% in cash at this particular moment. And then you have buy side boost here with Ethereum, the first long trade. This doesn't count as we weren't in it. So Ethereum here taking the first long trade, buy side boost, V4. Couple of things. Yeah, so wasn't a part of this. Couple of things. Jump. Don saying, listen, I crafted a buy side boost that only trades once a day. 7 p.m. in my Central European time zone, which makes it the middle of the day, late in the day US. I am personally already trading this variation. Happy with the back and the forward test. I think people, might really appreciate this, as it opens up the door to being able to trade once a day. Now, over here, this is Don went ahead and he has this firing buy side boost once a day. This is traded on the 6-hour time frame with session filters. And then I think that can make life a little bit easier. Let's take a look a little bit more under the hood. He has over here, so we're going to be looking at V4 and V2. So he has over here, I'm looking at 2021 numbers, and they're just off the charts on that. I'm going to start here 2022. He has V2 buy side boost. I'm assuming here, Don, correct me if I'm wrong, 61.84 versus V4 6-hour 17.43. 2023 355 versus 513, and then 2024 97 versus 74. And then he has 10% in 2025 versus 33%. Phoenix Fire has the numbers for buy side boost back tests on V4 trading all sessions. Bitcoin, that's 2 of 3 signal periods. And he has over here in 2022, 66% gain. V4 in 2024, 114% gain, 20% gain in 2025. Said that 2023 gains were just off the charts at V4, 922% versus V2, 307%. And then the V6 over here, not 700%. I'm sorry, not 900%, but still 500%. So, is it something worthy of consideration that a lot of people might wish to say, you know what, this makes my life a lot easier? You can't automate buy side boost. You could automate V4 trading on both sides easily. You can't automate the buy side boost, something that needs to be done manually. So trading it with one signal period a day, that whether you're in Europe or the US is that during a waking hour, that's something that I think that there would be a lot of interest in. So as I told Don, I could go ahead over the weekend here, lock down these templates over here, and then we could share it to those that are interested in taking a look, and then we could continue to evaluate further. So that's the plan for buy side boost with an alternate option. And I think that's good, and I think that's healthy. As we're continuing here on the ride, let me go ahead and just take a look at a couple of things over here. I'll start with Ethereum. This is taking a look at performance of Ethereum with CTM 2.0 versus CTM V2 and then V4. And these two are so close. CTM 2.0 continues running naked here in the wild, forward test since the summer of 2022, and versus V2. And you could see, and the reason I have it going back to full history is so that it gives a more accurate CAGR. If I just put it from like 2021 to present, the CAGR includes the back years. So that doesn't work out so well. And I wonder. All right. So just comparing the last year. So V3 on, I'm sorry, V2, there's no V3, V3 and V4 is put in together. I've been looking forward to this one. This was something we said we get out earlier in the week. I said maybe on Monday, but here we go. Nice, Greg. A lot of people seem to be, yes, beautiful ace. Execution is everything. So jumping over, we got last year on V2, 75% versus 50% on CTM 2.0. The previous year, CTM 2.0 crushing it, 81% versus 30%. And then you have V2, 40% versus 8.5%. Man, I made a mistake this year and I went heavily into Ethereum. Ethereum the year before, crushing it, and the volatility was outperforming. That that mistake was a lesson learned. And again, the longest thread in CTM history is allocation. It's in the Nuggets channel, and the summary, the conclusion was after all that massive work led by Fisher King, was that you never know what's going to happen in the future. And the ideal allocation is an even allocation across the instruments that you're trading. You could branch that out then from Bitcoin and crypto and add in equities. And at that point, that is the best formula. So if Ethereum CTM 2.0 is a crusher, right? Now max drawdown though, you take out the highest drawdown occurring in 2017, and the highest drawdown here occurring recently in the last 2 years, 2024, 25. If someone said, I don't know which one to trade, and I want to go ahead and trade them both with equal allocation, that would seem pretty smart, except the one thing that is not tested over here that we can't do is that we trade this with the ST1 and the ST2 off, depending on if we're in a bull or a bear market. So you can see that massively affects drawdown, and then it's also affecting performance. So it's not a clean, accurate back test, and the edge definitely goes to V2. But let's look at what's going on with adding now the comparison of V4 into the mix. And very close here. So again, very close. So we have the overall CAGR pretty much in line. Notice though that in 2017, you're looking at a 650% gain these 2 years. So we could, this is a 400, 245, and then you have 381. These 2 years, they definitely outpace V4 during that massive volatility kick. You could clearly say that if you take away 2017, 2018, and from 2019 to present, V4 is outperforming both of these. You add in a volatility event, an adoption event, then, less filter usually crushes it and wins. CTM 2.0. Version 3 without the filter, without the extra filter on, assuming you're in a bull market, is pretty sweet and not lagging too much behind, but lagging behind. So that's the comparison here between the three, and you can see the consistency in the years 838, 34, 126 versus 72 and 81, 58 versus 67 and 50. It's pretty sweet. Let's look at Bitcoin. Now, only on V2. On V4, it's just trading as is. Cabby, on V4 Ethereum, you're trading it as it is. Those that continue to trade V2, that's the same thing. Bitcoin bull runs is in a bull market. You're taking off that extra filter. Momentum's rolling over in the space. Then you're going ahead and you're adding the extra filter. Whoop, whoop, whoop. All right, so let's take a look across here. I'm going to start here with the first two. The first two are buy side only. This is buy side only on 101 and Bitcoin bull runs. And you could see that we are going all the way back, even though that obviously you couldn't trade back in 2010. The reason I have it here, though, is just for the CAGR comparison. And if we took it off, though, to take off that 1 year, I want to see the difference is going to be pretty massive here in the CAGR for buy side only. So hold on 1 second. Let me do my thing and go through this. So, yeah, okay. But Bitcoin bull runs still outperforming 101 with that 1 year off. And I'm going to put it back on. And last year on 101 was a red year. And then the only thing I could say for Bitcoin bull runs is that, for example, in February, this closing trade here, that happened because the trade entry was in October. It's October or November, and then it was holding for 1, 2, 3 months and closed over here. So if you start this in January, then you have that trade not included. That's just a little bit of a tidbit. So this is buy side only over here. Now I'm going to go ahead and take a look at including CTM 2.0, 107, and also I want to include over here, before we get to 104, just so you can see the difference over here, 108. So I'm going to just put these a little to the side for a second so we could compare all three of these at the same time. And then looking from a Kager perspective, 108 outperforms, and we always knew that 108 was overall superior to 107 in overall profit, but the stop loss is much wider, and that's why a lot of people prefer 107. You could see both of them in last year as Bitcoin had a red year. Also, both of them are trade. By the way, these trade both buy and sell side, right? So it's a little bit of an advantage for them over 101. But red year for all three of the buy sell templates in 2025. Bitcoin also down on the year. And then you could look at, the first year, CTM 2.0 is wild. We'll go back the last 3 years and compare performance. 42 versus 37, 38, all pretty much within a couple percent, all pretty much within a couple of percent also in 2023. And then the lagger here is CTM 2.0 in 2000 and I don't know what year this is. Hold on one second. 2022 and 2020. They're all pretty close. They're all very close each year. All right. Now let's take a look with that in mind. We'll just say, well, they're all pretty close. Let's look at how V4 is reacting in comparison to them. I mean, CTM problems, too many good models. All right. So let me just go over here. I'd like to get them all in here. All right. So you can see from the Kager perspective that V4 crushes everything. They're not even comparable, right? From the last few years perspective, you could see all previous three were red for the year, 25% for V4, pretty good. You look at the year before, 133 versus 37, I mean, smashingly better. You look at the previous year, 2022, doubling their profit of all three. You look at the year before that, I mean, you're looking at 20%, 20%, and 10% versus 118%. The year before, they smashed it, 116, 116, 118, but 184. I mean, with Bitcoin, it's a clear winner, which is why, in my opinion, it makes every other template obsolete. When I say every other template, I don't care if it's Bitcoin bull runs. I don't care if it's CTM 2.0. I don't care if it's 101, 107, 108. You could see that you're seeing V4 the clear winner. It's a little different on Ethereum. And you say, well, we got three really good models, and hey, if someone's automated and they're taking 100% of their allocation and divided into thirds, that seems pretty good. That seems pretty smart. I see a clear edge though in the most recent price action. You take away, let's do that over here. Let's take away those 2 years and start in 2019. And we'll be able to get just a quick look. It's not going to be the true Kager because it's including those 2 years that we're just dumbing out, but we'll get an idea. So you can see 94 versus 77 and 76, and with the lowest drawdown. So in my view, that V4 on Ethereum for that reason, assuming that, well, listen, there was a hype cycle. Ethereum went bazooka in 2017 and then had a bazooka drawdown in 2018. And you take away the hype cycle, V4 seems way superior from my view. So is the weekly chart forming a head and shoulders? So let's take a look at that. Left shoulder, head, right shoulder already broke down if that were the case. So I don't know. I'm trying to do this, and if that were the case, I don't think I could draw it because the neckline would be like this. And let's just say that I don't think it's a head and shoulders, but if it were, is that then the neckline, which is weird because you got to start over here for drawing it, and maybe you could say something like, oh, that's close to it. And then if that were the case, this head and shoulders has a target of right around there, 76. So it could be. It seems to me that the worst case scenario, if you're looking here at a rolling top occurring, the worst case scenario of what you could see downside targets would be, puts it right in the middle here of our COVID low extension structure and our Bitcoin bull run invalidation. And if that were to happen, and that was indeed the worst of the worst, and you have a 50% drawdown from the top, well, then that kind of fits exactly where we are anyway, as that diminished downside volatility occurring. It could happen. The macro certainly does not seem to point to anything like that at this moment occurring. And you know what? It could, but it doesn't seem to point that direction over here. We'll see. I mean, we'll see what a leg down looks like if we take out the leg down. Right now, we're consolidating top half of the channel, and it could be. Yeah, I mean, and the same thing with CTM 2.0, which has the most. When we launched it, a lot of people were so concerned about the forward test has proven to be phenomenal. You could say that V4 which is built on top of V2, which is built on top of CTM 2.0, just adding some nice money management gifts to it. And I don't think that forward testing is an issue. I definitely understood, how long ago is it? 3.5 years ago. The major concern about what curve fitting was and the forward testing and what it might be. And it turns out these models should be fit. And the only thing we've ever seen is poorly fit, right? Poor, like you could always do better, which was the hesitation of getting out V4 ahead of time, because when that happens, usually that's when the model is locked in, right? Now, there are some features that you could play with, and including moving stop. On the last rollout, hey, you included moving stop loss, X amount in profit. And it would be great if some improvements can be made to where we are. To push those updates through is no problem. I would love that. So, I mean, I feel like these are stable models, but in the next few months, if we see any improvements worth implementing, we'll do that. And including here on Don, a major contribution here, if people want to embrace it, allowing the ability for once a day to be able to execute on buy side boost. Yes, returns could definitely be lower, and I like to think personally that, I mean, I'm just thinking about the sustainable channel and how, like, could this go on forever? Now, how long could it go on for? And we have this over here as you know, a guide. And yeah, I mean, outside of like run ups and run down, those would, the periods like this for us should be areas where we outperform. And then if volatility stays roughly in line, then I think that the last few years of performance that you've seen in this ultra low volatility regime, that should be on par. So I think that if you get any type of like volatility push, right? Over here is a volatile, like that could exceed profits that we've seen over the last few years. I don't think volatility is going to get lower. It's hit a historic low. And if I don't think it will. Yeah, so I feel great about that coming out of the last 3 years, the regime that we've been in. That seems to be the hardest to be able to trade through for a momentum sit. Click facial numbers should be correct. I compared V2 on 8-hour buy side boost with the V4, with Phoenix compared V2 to V8. Right. I compared V2 to V8 to 8-hour and with the V6. And Don, I could go ahead and I can't get in those numbers. I was going to say we could put in the chart panels. Oh yeah, 2024-5 was extraordinarily tough. There's no doubt about it. And you know, I guess we'll find out in hindsight. Hindsight is everything, but could it turn out that that was actually a bear market, right? I mean, in so much as what we saw with MicroStrategy, it certainly seems to be pointing towards a bear market. I think it's just more what would be more likely called in the past, just like a like mid to late mid late cycle consolidation, and super healthy. Let's actually take a look at this over here together, and I'll start here and then I'll go into something that I want to share. Yeah, let's take a look at really quick at the two. So rough strokes here, nothing to really. This is that trend line that I'm watching. We know that here we pegged this breakout here, this sell impulse, and really they're just coiling. I don't, not much to add. 2-year. Yeah. All right. Not much to bring into the conversation. So, well, I'm not familiar with permutation tests. So we haven't changed the way that we've backtest since the inception of CTM 2.0. There are certain thoughts out there that, for example, when backtesting, you shouldn't include the most recent 3 months, and you should develop your model there, and then you should then use those 3 months as a forward test. And we actually use real time as forward test, and V4 has been stable here for well over 3 months. But I personally think that and you could, our models are up there by far with the best of the best. So I'm not really interested in what other people believe is the way to do it. Hive Mind is literally second to none here, but what we do is the most data you have possible is the most beneficial. And I think that why that discussion remains up for debate through a lot like we know what works in the real world. That's the way that we go about it. Um, so jumping back over here, I mean, this is not what I want to start with. I want to start with this, but I'm going to start with this, and this is just like something that should be considered here, as you know, that my view is in 2026 we're going to be running into the re-acceleration theme becoming the standard. And you got, this is from Felix, Finance Felix. $4.7 trillion will flood the economy in just 9 months, creating the largest wealth transfer in American history. Chat GBT signature right over here. This is Trump's tax plan to inflate their debt away, which is what they're trying to do. Institutions are already positioned for this. Here's what's going on. The 4.7 doesn't haul in once. It flows in 5 waves. Wave 1, April to June, tax refunds starting late February. July to September, wave 2, corporate reparation. Wave 3, bonus depreciation, quarter 4. Quarter 4 also, capital expenditure boom. Wave 5 and 6 is the inflation response. Trump also, you saw here, basically saying those that are building data centers need to pay for their data centers. That's in the middle of real time. But let's break down the 4.7, right? So you're looking at $1.2 trillion in tax refunds, 2.1 corporate and cash from overseas, and accelerated depreciation. History shows what happens. This is a good lead-in to looking at this. So let's go ahead and continue here. History shows what happens with tax cuts. 2017, 1.5, S&P 500 up 28%. Bush cuts, small caps up 47%. So you got a lot of people thinking here, as the Fed is likely to continue their rate cuts in 2026, beneficial of small caps. Here you can see that history is showing tax cuts benefit small caps as well. Reagan cuts, Dow up 135, 5 years. Wave 1, now to February, smart money position before refunds hit. I don't know. Small caps outperform, blah, 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 blah. Wave 2, late February to June, $1.2 trillion consumer accounts. 35% goes into debt repayment, 25 discretionary spending, savings, essentials, blah, 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 blah. Corporate reparation. I don't know about this. Apple, Microsoft, Google bring overseas cash home at reduced rates. 40%. This is the passive flows into markets has what has been running markets over here, and that is, weekly, the amount of money that's put into people's retirement accounts, that gets put into the indexes, heavily weighted here. Buybacks is the other factor over here, an enormous, like, that's a train that people trying to step in front of is, I don't know, but you can see it's increasing. 40% goes to stock buybacks, 30% to dividends, tech giants and dividend. So maybe quarter 3, 4, Mag 7 picks back up over here. Right now we're seeing a rotation. I think it's healthy. And then over here, quarter 3, 4, you have the bonus depreciation and capital expenditure. I don't know. All right, 2026 and into 2027, after we muddle into the reacceleration, seem very favorable. We have to, it's too far in advance to see what happens over there. Yardani Research, Ed Yardani, a legend in the space, putting out what he believes is what we're looking at, the roaring 2020s, with an S&P by year-end 2029 target of $11,000. Look what I mean, look, all right. This is so important, I think, just to revisit right over here. And I like to start off with, I have a better slide somewhere. There will be another drawdown in 2026, just like there was every year before. But downside volatility isn't the enemy of high returns. It's the reason they exist. Let's start over here in recent history, right? With the outside of 2017, this is S&P 500, and 2021, 5%, 2.5%. generally speaking, over here, we have drawdowns, S&P 500 between at least 7 and 12%. This view over here is pretty neat. It shows that 94% chance of having a 5% drawdown. Now, this is not from the opening of the year. This is from whatever the high of the year is, right? 63% chance, pretty sizable chance, 63%. 10% or worse, and then it gets much lower as you move all the way down the line. Any thoughts on Coinbase allowing stocks? Is that what you're saying? Coinbase allowing to buy and sell stocks? It's inevitable. No, I don't have any thoughts on that. I don't. It seems that the NASDAQ is trying to make sure that all its listings are tokenized, and that is the direction that this ultimately ends. 24/7 trading. I mean, markets almost, I mean, they trade basically all the time anyway. There'll probably be very low volume overnight. The major volume would continue to happen during market hours. But I think in a world yeah, I'm all about trading 24/7. I think that's the way to go. And I think that everyone, regardless of what happens in the world, like not to be able to exit over the weekend is just weird. So I guess that's my generation, your generation with, Bitcoin trading 24/7. So here we are. I'm going to be taking a look this weekend at getting this out to some people inside CTM so that they could continue to evaluate. And then I could become more familiar with it. And then we'll continue just throughout our normally daily sessions, forward testing this, reviewing it, and watching it along with our other live templates. I think weekend should be. I don't know that it'll change stock dynamics too much, and I do think that these things should be open on the weekends. What happens if anything happens, right? And I personally just think so, but that's why a lot of people stick to the currency market should close on. I guess that's why Bitcoin is superior. All right, y'all. It's been a long week, a fruitful week, a great week. I hope you all have a great weekend. And then Monday in the US is Dr. Martin Luther King holiday, but we'll be here. We'll be live. I'll see you all then. Everyone, rest up. And I'll see you all back on the inside throughout the day and over the weekend. Cheers, y'all.